Check, check, check. Check, check, check. What's going on, everybody? How y'all doing? How y'all doing? How y'all doing? Yeah. Just getting myself together. I just got back from picking up my sweetest car that has been in the shop, as she so eloquently puts it, since October the 8th. Since October the 8th. Let me send out the bat signal on Discord. Send out the bat signal on Discord. What did Jim put a dissertation up? Let me see what Jim. Let me post this. Let me send out the bat signal, and then I'm gonna see what Jim posted. See what Jim posted. Let me see who in here. I'm thinking that's from yesterday. So yes, that is, because when I hit live chat, that stuff disappeared. See Tapesh up in here. Tish up in here. Lump up in here. What's good, Tim? I'm still at work, so I'll be listening to you on audio. Go in heavy with the technicals. Negatory. We will not be going heavy on the technicals this evening. Word on the street is that Lil Timmy Rogers put on a clinic this morning. They say that boy put on a whole clinic this morning. So if you want some technicals, not even technicals, if you want to understand how to trade in one concise video, I can say that this morning on that I Stay Popped Up, the public edition, this right here, this right here. What's up, Deborah? What's up, Kim? What's up, Kashaya? I'm giving it a few minutes for people to pull up. Who was on the pop-up session today? If you was on the pop-up session today, say me. I was on the pop-up session today. It really helped. This morning pop-up was fire. Me. Sherwin, please help. And we ain't gonna call no names. But Sherwin, the lady that you are married to, the RN, the person whose name starts with a D, followed by an E, by a B, by an R, by an A, help her figure out how to unmute her phone on Discord. Help her out. Please.
Yeah, you gotta press the unmute button.
Yeah, Tapesh say you got to press the unmute button.
Straight up. Yeah.
Hey. All right, man. I think I done separated the wheat from the tail. I'm not going to be before y'all long today because, like I say, we went crazy this morning. So we ain't gonna stay here long today, right? We ain't gonna stay here long today. So if this is your first time tuning in to Tim's Tidbits, allow me to say welcome. If it's not your first time tuning in to Tim's Tidbits, I still want to say welcome. But give you a nice hearty, well, thank you for always tuning in to Tim's Tidbits. If by some slither of my large imagination that you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Aranya Grande. You see it right there on the shirt. You see it up here above my head. That's Big Spider if you don't hablo Espanol. And you are in tune to another episode of the Intra-Day Price Action Recap. Y'all like the echo effect? Hey, man. The young folk told me that I'm supposed to be asking y'all to subscribe if you ain't subscribed. Like if you like what you see. Share it with your friends and leave comments. So do all of the previously stated. Hey, man. Why does it say a name that I don't know is typing in the Discord? It says a name that I don't know is typing in the Discord. Who is that? It say verified. Oh, did you just recently join? Did you just join? This person that Jada G Phil. It says verified. Did you just join? I joined yesterday. Okay. What is your YouTube name? What is your YouTube name? So I can make sure I put you in the right tier. That's why I'm like, wait a minute, I don't know that name. Y'all seen the look on my face. I was about to, hey, y'all remember when I had to change the invite link because some people showed up in the Discord that weren't supposed to be there. I ain't saying nobody in the gang shared the link, but it was people in there that weren't supposed to be there. What's your YouTube name? I see some say somebody rejoined yesterday. Is that you? I got a thing that says somebody rejoined yesterday. Is that you? Where's my comments? If you can speak to me because you're in the voice. Okay, I see it. Okay. All right, let me put you in the right tier. Because it said rejoined. So I'm like, I don't remember. Oh, you can't talk. Okay. All right, let me come here. Put you in the right tier. Okay. All right. You're in the right tier. Now, you're in the right tier now, so all is well in the world. Now let's get to it. As they leave. As they leave. Let me do that. I'm sorry, y'all. I got distracted for a brief second. You're very welcome. What do you want to be called? Because inside the thing, it says Jada G Phil. I'm assuming your name is Jada. And then over there it says JMZ. So what do you want me to call you, Jada or JMZ? All right, let's get to it. The intraday price action review. This is our daily range. This is the start of the day right there at 6 p.m. yesterday. Right. This is the start of the day at. Hey, hold up. JMZ has a blue circle with a star. That means you've been around here for a while. I just noticed that. Right? If you had just joined yesterday, you would have, I brought the wrong screen over there. If you had just joined yesterday, you would have just a blue square like this over here. Right? That little blue square like that with how Tepesh got. But you got a light blue square with a dot in it. That means you've been around for over a month. You've been in the gang for over a month. So that means you probably just popped into the Discord yesterday, but you've been in the gang for over a month to have that little icon right there. So in that case, welcome back. Welcome back. Welcome back. Welcome back. All right. This was the start of the day. Before we get started, does anybody have any questions in reference to what we went over today, this morning on the pop-up? All right, Jada. Do anybody got any questions in reference to the pop-up that we did this morning? Yeah. Appreciate it. I appreciate you. I appreciate you. Going once, going twice. Anybody in the Discord? Yay, nay. I don't see anything in YouTube. I don't see anything. Did anybody watch it? Anybody on here watch it? Okay, you ain't finished? All right. I tried, but it was buffering the entire time. Cheap internet, family. What? Don, you was on there. You was on there. What you mean you tried to watch it? You was on there with us. You was on there the whole time. What this right here mean? I be seeing people put this in the chat. You see that little carrot right there that Kashaya put? What does that mean? Are you pointing me to the comment above you? That little carrot right there. I see people do that all the time. What does that mean? Are you pointing me? Ditto. I speak English. Thank you. The comment above. Thank you. Is referencing the previous. We all, God dog it. We all speak typo, Kashaya. You don't have to correct your typos. It's 2024. We all speak typo fluently. Right? So when you typed out, it's referencing the previous comment. My mind read is referencing the previous comment. So we all speak typo. You don't have to correct it with the little asterisk next to it. Even if it's a cuss word, we know what you're saying. Anyway, so looking at price now, mind you, we covered all of this here. We covered all of that during the pop-up session. Right? Because remember, we had our opening range. I told y'all I was trading up in here. And then we had went after midnight. And we looked at how price did something here and did something there. This over here was to the bullish side. This over here was to the bearish side. And then we came back down, engaging the relative equal lows that we was talking about over there. So we talked about all of that, all of this price action right here in the Not for your own sanity. That's you, baby? Is that my wife? Yes. Oh, what's up? How was your day? Y'all hold on for a second. How was your day? I'm back. Test, test, test. It looked like the mic working. Can y'all hear me? All right. So, like we were saying, we covered this amount of price action this morning with the clinic that we put on. If you didn't get a chance to check that out, go check it out on the YouTube channel. It's titled, "Can You Hear What the Candles Are Saying?" Is that what I named it? Can you hear what the candles are saying? And this is the thumbnail right here. This is the thumbnail. It says, "I stay popped up." Right? It says, "I stay popped up." And can you hear what the chart is saying? That's the name of it. Can you hear what the chart is saying? Right? Pop-up session 1119. Right there. If you didn't get a chance to check that out, go check it out. I think it was a pretty good video. I think we went crazy. Shout out all the gang that was pulling up with the hard-hitting answers. Matter of fact, I'm so proud of y'all. I got to give y'all a little love one more time. I got to give y'all some love one more time because y'all went crazy with the answers today. All right. Let's start over here. Since we already did all of this, let's come over here to... we'll start at 7:30. Let's start at 8:30. Right, 8:30. We're starting at 8:30. Well, let's go back a little bit. Let's go back a little bit to start with the structure. Let's start with this as the structure is being established here. Right. I'm gonna come here while we're looking at the structure being established here. So let's go back to the beginning of the day. Okay. So we're going to the beginning of the day. Okay. What do we say? Class participation time. This is 12 a.m. Right? Remember, that candle right there is 12 a.m. Okay. Let's show our midnight open so we can remember what 12 a.m. is. Boom. Right, now I can move this. See here, it starts on that candle. That's the opening price, and that's the candle that it starts. Can y'all see that black line? Do I need to make it bigger? Let me make it bigger just in case. Just in case y'all can't really see it well, I'm gonna make it bigger so you can see it. All right, midnight. That is midnight, right? It starts on this candle, so that's the 12 o'clock candle, and it's a down close candle, so it's on the top of the body. That's the opening price at midnight. Okay, so what is the first? We're starting a new day here, right? We're starting a new day. So we are going to ignore all of this over here. Who cares what it's doing, right? We're ignoring all of this. I'm going to scribble, scrabble it all out. Who cares what's over there? Okay? Who cares? So that we can look at the fractal nature of price. Okay? That scribbled out enough? Is that scribbled out enough, or do I need to scribble some more? Somebody tell me. Is that scribbled enough, or do I need to scribble some more? Huh? Is it scribbled enough? Who in Discord? Somebody in Discord? Somebody on YouTube? Is that scribbled enough? Okay. Kill me. Okay, so now that we got it scribbled out, right? We got it scribbled out. Okay. What do we say we look for price to do? What do we want price to do when we first sit down in front of the chart? Right? What do we want price to do when we first sit down in front of the chart? You know what I'm saying? It's cool if it's already established, but it's even better if we allow it to. There you go, here to learn and share. There you go, Kim. There you go. And for those that don't see what they put in the chat, we want to see price established a range, right? Preferably a new dealing range, right? So how is a dealing range established, right? Do I sound like a broken record? Do anybody feel like they got deja vu right now? How is a dealing range established? How? How is it established? How is a dealing range established? What needs to take place for a dealing range to be established? A high and low, yes, a high and low, but what does that high and low need to do? Right? We need to make a high and low, yes. It needs to engage liquidity where, Kim? It has to engage liquidity where? We're making a high and low, so it engages the liquidity where? Yeah, okay. Attack the liquidity where? What? We're establishing this dealing range. So what has to happen? Buy side. No, not or. To establish a dealing range, you have to take out. It ain't or. Come on. Y'all help Kim out. Both buy side and sell side. All right. We taking our buy side here. Right. We got a new day here. Right. This is our new day. Right. We trading and we're establishing. We're engineering liquidity here. Right. We're consolidating. right here on this 3 a.m. candle, right? What's important about 3 a.m.? What's important about 3 a.m.? It's during a macro time, but what else is important about 3 a.m.? Right, very good. It's during a macro time. That's the London Open. Very good. 3 a.m. is during a macro time. 3 a.m. London Open. So the across the board first answer is that's the London Open. Right? But for those in the know, it's slap dab in the middle of a macro time. Okay? So if you notice what's going on here, we engage buy side right there. That candle, let me make it bigger just in case y'all can't see. All right. We're going to spread this out. I'm going to come there. All right. So here we are at midnight. Right. We're consolidating. All right. We go up there above the buy side. So we engage buy side right there at 3 o'clock. That's a certain time. Right. Certain time. Now, what does price do at this 3 o'clock? I mean, during this London session, right? What does it do? Right? Let's look at the London kill zone. Let's set our London kill zone up real quick. Right? The London kill zone is from 1:30 in the morning to 5 in the morning. All right. And then we'll do this right here. Uh-oh, I didn't do something right. Okay. All right. So this is the London kill zone right here. Right? What happened during the London kill zone? Right? Looking at the chart, what happened during the London kill zone? Price did what? What did price do during the London kill zone? Don't overthink it. What did price do during the London kill zone? Somebody talk to me in the Discord. The typing ain't typing. What did London do? I mean, what? No, don't overthink it. What did price do? Just look at that price. What did price do in the London kill zone? What did price do? Don't overthink it. What did it do? I came in late. I would definitely have to see what Tim was explaining with those scratches. Somebody said accumulation. Like this is the whole London kill zone right here. Right? This the whole London kill zone. If you look at price, dropped. There you go, 80. There you go, 80. Hey, what did I say? I said don't overthink it. Every time we talk about price, I'll be like, what did price? And then we got accumulated. We got took out both sides. We got took out sell side. We got just looking at price. The simplest thing, price dropped during the London kill zone. It started here and it ended there. Price went down. Okay. Now, this right here is the three. Why did you say that, Tim? We're getting to it. This right here is the 3 o'clock candle, right? That's the London Open. What do we look for, or what do we anticipate going into a, hold on, put this scribble scrabble up there. what do we anticipate or what do we look for going into a new session, a new hour, a new day, what do we anticipate going into something new? Manipulation, right? We anticipate manipulation. So when the London opened right here, okay, London opened right there, what did price do? What did we say price did on this 3 o'clock candle? We said price did what? Took out the buy side, right? So if overall this whole London kill zone, if overall it went down, when we came into this new session right here on that candle, look what price did. It went up first, right? It went up first. So guess what that means, right? Coming into this London kill zone, this is your accumulation, this is your manipulation, and this is your distribution right there. And when we got down here, probably up under some low over there that we don't care about right now because we're not in the trade and we're not looking for targets, right? And then once we got down here, we started to distribute and price started to move back up into the range, right? And that's just inside this area right there. Accumulation, manipulation, distribution. Come up off it, right? And if you made this out to be a candle for the kill zone itself, right? For the kill zone itself, then we got, right? We said accumulation, manipulation, distribution, right? So this is the verb, and what is the noun for this little area of price action right there?
Power of 3.
Power of 3. Very good. Because we opened here, right? We accumulated positions. We manipulated up, taking out the buy side. We came down, made a low there, and then price came back up and closed right there for the end of this fractal of this time, this fractal of price, and during this window of time. And if you turn this whole area of time into a candle or a bar, this is what that bar would look like. We would have an opening price here, a high there, a low there, and a closing price there. And what type of bar would this be? A bullish or a bearish bar? Speak to me, speak, Lord. Speak, Lord, speak to me. Bearish. Bearish, very good. And what do we say price did during this time? We said price dropped. All right? Price dropped. 80 told us that. So we see that price dropped, right? Now we see that it was a actual power of 3 during this session with accumulation, manipulation, and distribution, right? You had an open, right? Went above the high, came down, set a low, and then closed at or near the low, right? An actual power of 3 session or time frame. And that's what your bar looked like, right? Do I sound like I'm repeating the same thing over and over and over? Is anybody getting deja vu yet? Is anybody getting deja vu yet? Okay, getting back on track. We want price to establish a range. Now, our range ain't even established yet. But if you understand what price is doing, you can engage before all of that even happens, right? So now, coming into the new day, right? We made us a high right there. How do we know we made a high? Because we came here, poked up, and we started to drop down. Boom. We made a high. Buy side. Let me thicken it up so you can see it. Boop. Buy side. Text. Buy side. Buy side liquidity. Okay. Taking out buy side and created a high. So now the buy side is above that. Come down, right? Make a low, push back up. Come down, make a low, push back up. Right here, boom, go there. So now, at this point here, we can safely say we have established a low. Right? We have established a low. Boom. Right? So coming into the new day, we established a high, taking out buy side. We came down, established a low, taking out sell side. Right? Liquidity, liquidity. Right? So now we have a dealing range, and our dealing range is broken up into two separate price legs. Right? This should sound oddly familiar to somebody. It should sound oddly familiar. Okay? So now that we have our dealing range in place, what do we wait for? And while we're waiting, what are we looking for? All right? Now that we got our dealing range, what do we wait for? And while we're waiting, what are we watching to see if price creates?
Waiting for it to take out side, sell side, buy side, relative equal highs, relative equal lows.
Yes. You're looking for it to engage with liquidity, either on the buy side or on the sell side. And while you're watching for it to engage with this liquidity, you're looking to see if we set relative equal lows or relative equal highs anywhere, right? And then once price engages with the liquidity, then we're looking to see if there's an opportunity to go engage with the opposite side. We're anticipating an opportunity to engage with the opposite side. If you are, and as you see here, we established our dealing range, right? These ain't really relative equal, but relative is subjective, right? And then we come down and we take out the sell side. So now that we've taken out the sell side, now we're looking for clues if price is going to give us an opportunity to engage the buy side in our dealing range, right? And price comes back and engages the buy side of our dealing range. Now, if you are bullish, but Tim, why would I be bullish? Right? Because you right now, in the grand scheme of things, right, you're in a discount of the move. It's not really on the high, but that's close enough for government work there. Fine. You're in the discount. So since you're in the discount, right, you're in the discount, and now you're looking to see, right, is price going to give you an opportunity to buy and go up, right? Or is price just going to move back to a premium and maybe complete a market maker sell model, right? But since you're in the discount of the move, you're not looking too tough to be trying to short right now, because you're in the discount of, you're in a deep discount, right? Look at this long drop there. You're in a deep discount. Okay. And even if you were just looking at the last piece of the range here, right? When price is down here in this area, you're still in a discount. When we're looking at where we engage the sell side, you're in a discount down here, right? You're in a discount. And then when you zoom all the way out, right? Looking all the way out, you see that on a longer time frame, higher time frame, longer time frame, you see that we engaged some sell side liquidity that's inside a range, a dealing range. And when you engage the sell side, you're looking for opportunities that price may want to engage the buy side. So all of those factors in place, now you're looking, once you engage that sell side, price is fractal. So you're just inside a bigger range. Inside our smaller range here is just inside that range there, right? So when we engage our sell side here, we're looking for opportunities to engage this buy side. And at the same time, while engaging this sell side, somebody who was zoomed out farther, they just engaged their sell side. Now they're looking for a reason to engage this buy side. And now everybody's looking for a reason to engage their buy side. So now everybody's on the same sheet of music and everybody's looking to buy. So now that we got the 30,000 foot view from the zoom out, let's zoom back in. Okay, let's zoom back in and show that price. Where we was at? Oh yeah, we see that price came back and engaged the buy side. Now, if you are bullish, right? Since we were bullish, since price was bullish, we just talked about why price was bullish, right? At this point here, once we establish our dealing range, what do we want to see price do? Right? Since we're bullish and we got our dealing range established and we are waiting on price to engage liquidity, what liquidity do we want to see price engage? Manipulate lower. Sell side liquidity. Exactly. Right? We speak typo. Sell side liquidity. So since we're looking for reasons to buy because of all the reasons that we said, we want to see price come down and attack the sell side first. Why is that? Because the algorithm uses stops as rocket fuel. So if you want to go up, you want price to manipulate down and take out liquidity. And once it takes liquidity, you want to see it turn around and go to Picasso's house at the opposing liquidity, right? Those are the moves that will give you the most ideal entries if it manipulates away first and then engages, right? Will you always be a part of that? No, you may come in the middle of a range being set up, but this is the beauty of letting it form itself. Will it happen all in one session? Most of the time it won't. But when you let it form the range, and then you can wait to be a part of that fake move down, right? Pick up souls to crush first. Right? So we're going to put the meat back on the bone. Right? We're going to put the meat back on the bone. What time is that? Okay. So there. All right. And as you see here, right, as you see here, price engaged the sell side, right? So this is the manipulation, right? And then price went up and engaged the buy side. And as soon as we tapped the buy side there, we pulled back off of the high. And then, oh, what do y'all see here? Look at this kill zone. And then look at this kill zone. What do y'all see there? Now this has nothing to do with, you know, it like, oh, this is always going to happen. But can somebody, just looking at those two kill zones, right? Looking at these two kill zones, what do y'all see here? Look at this kill zone. We already talked about this kill zone. Now, what do you see here in this kill zone? Somebody said balanced price range. Nope, not balanced price range. Right? We're looking at this one and that one. Right? This one and that one. Opposite moves. Opposite moves. Right? Opposite moves. So this one here, right? Over here, we had us a power of 3, which gave us a open, high, lows, close candle. And over here, we got us a power of 3 that gave us an open, low, high, close candle. Right? They're opposites. Okay? Because this one here, remember, this one over here, coming into this kill zone, we had an open, high, we had a low, and then it closed right there. This one here, we got an open, low, a high, and then it closed. I'm too high. It closed right there. Right? So open, low, high, and then close. Right? Opposites. Opposite candles. Right? Open, low, high, close. Opposite candles. And look at when it played out. From the beginning of the kill zone to the end of the kill zone. Beginning of the kill zone, end of the kill zone. Do you think that's a mistake? I don't. I don't think it's a mistake. All right? But not only did it do that, so now, like I say, you're not always going to get all of the concepts every single time. But when you see them there, they're there. So now we got a bearish power of 3 during the London. We got a bullish power of 3 during the New York morning. Right? Now this bearish power of 3 during the London set up our dealing range. The bearish power of 3 set up our dealing range, right? During this bearish power 3, we set our dealing range, right? Then we come over here into the New York morning time, right? Time, set up the beginning. Come over here to the New York morning session, time, right? This portion of it gave us our manipulation and distribution. Right? So time, right? Set up our range, manipulate it lower, distribution to the top. Right? Is it clicking? Is the clickety clicking? Is the clickety starting to click? Do y'all see who got deja vu? Who feeling some deja vu right now? Is anybody feeling deja vu? Is anything that I'm saying brand new? Did I say anything brand new this evening? Did I say anything that someone here has never heard before? If so, I want to God dog it. This thing jumped off again. It jumped off again. The ghost of Mabel Wable up in here. I'm the ghost of Mabel Wable. Put the light back on the table. Nope. All right. All right. Nobody, nothing is strange to anybody. So now let's look at, now that we see, right, how price, the most important thing is why price moves, right, and how it's delivered. Okay. So why does price move, right? It moves toward what? Two things it moves toward. Right? It can consolidate, but once it moves, it's moving toward what? What two things is it moving toward? Liquidity and balance. So it's looking for liquidity and inefficiencies. Right? So if it's not moving toward liquidity, then it's going to be moving towards some type of inefficiency, right? If it's not moving toward liquidity, it's going to be moving towards some type of inefficiency. Okay? So when you're looking at price and you're waiting for price to engage with liquidity, okay? If you're looking for it to engage with liquidity, how can you know that you can trust a PD array to do its job, right? How can you know that you can trust a PD array to do its job, right? Let's look at that. We got our range here. This is our dealing range, right? And we're going to take this and we're going to put it right here. And that right there is our equilibrium. Right? That there is our equilibrium. Ignore the fact that it says day. Right? I'll take that off anyway. And make it say range. Okay, now we can move to Fibonacci. Okay. Right, remember this was our dealing range, right? That's the equilibrium of our dealing range. Okay. Now, we're looking for opportunities to buy. All right, remember what we said? We were in the deep discount of a move. Right? We were in a deep discount of a range, and we like to buy. We buy in a discount and sell in a premium. Right? We've established our range here. So now that we're on a larger time frame, we're in a discount, and on our new range that we let price establish for us. Let me move these boxes out the way they're getting on my nerve. Right, in our new range that we've let price establish for us, right, below equilibrium is what? Somebody tell me what's below equilibrium and what's above equilibrium inside our dealing range that we let price establish, right? This part of the range is what, and this part of the range is what, right? What's down here? Below equilibrium. Discount, right? Discount is below, right? Premium is above, okay? Premium is above. All right, so when price comes down here in our second leg of our dealing range, right, and we come back up into this SIBI, right? We come back up to a SIBI right at equilibrium, right? First of all, whenever price trades down to like the lowest point of a range, right? We can anticipate it to draw back at least to where, right? Or we want to see price draw back at least to where, no matter if you're making a high or a low. Where do we want to see price at least try to draw back to? Remember, stacks on stacks on stacks on stacks, equilibrium, right? So we come here and we draw back to equilibrium, poke up into a slight premium, right? We go to a slight premium there, and then we trade back down and don't take out the sell side. Okay? We trade back down and do not take out the sell side. Okay? Then we go up into a premium, right? And then we reverse and come down. And on the way down, right, we create 1, 2 SIBIs, and we take out the sell side. Okay? Now, we are, and right here, let's do this. Let's do it again. These are 15-minute candles, so that's going to be a little difficult. So let's go to 5-minute candles. All right, let's go to 5-minute candles so that we can do this. 15-minute candles, I just like watching it on 15-minute candles. All right. Okay, now I can go back to 15-minute candles. All right. Oh, we ain't got to. We can stay on 5-minute candles. Price is price. Okay, so just when you go down, you just get more detail. Okay, so we're trading here. Okay. No, I only trade NASDAQ. I don't trade small caps. I only trade NASDAQ futures. NASDAQ futures. That's what I trade. So we're trading here, and then this right here is a macro window, right? This is a macro window. Time, okay? So what do we say? We came back to equilibrium, and then we traded down and did not take out the sell side, okay? After coming up into a slight premium into a higher time frame SIBI, right? So we come up to a higher time frame SIBI, which is designed to push price down, and we've come here to external liquidity, and we pull back to this internal liquidity. Now, if price is going to continue down, we should see a move back to external liquidity. But in this case, when we come to a slight premium, we trade down and we don't take out that liquidity. Okay? So then we immediately turn around and take out the buy side, right? Take out the buy side, and then after taking out the buy side, we drop off and take out the sell side, right? Now that we're taking out the sell side, before we get to the fact that it's the sell side of our range that we have been watching and we wanted it to engage this sell side, right here. What signature is this? We are bullish and we take out buy side. Then we reverse and plow through sell side. That's the starting of what signature? What signature is this the starting of? We're bullish and we go up, engaging buy side. Then we immediately turn around and snatch the sell side. That's a clue. I just gave you a clue when I said that. The infamous wig snatcher. That's the starting of the snatcher of the wigs. So if you're in tune with the algorithm and you're bullish and you see price engage buy side and then turn around and take out the sell side immediately, now you're chomping at the bit and looking for an opportunity on your entry time frame once you engage with your discount anticipatory reactionary point, right? Once you engage, we're going to say, let's just say that from this low to that low, right? This is our anticipatory reactionary point here, right? So we're just going to mark this out. We ain't got nothing marked on the screen, but we're just going to mark out from that low to that low. This is our anticipatory reactionary point here, right? And then we're going to go down to 1 minute. That's our entry time frame. Well, that's my entry time frame. Whatever your entry time frame is, use that. Okay? So now, here on the 1 minute chart, right? Remember we was talking about, because we're watching price on our higher time frame until we come into our anticipatory reactionary point, right? And we're not coming to the 1 minute until price gives us a reason to come to our, well, we're not coming to our entry time frame until price gives us a reason to come to our entry time frame. Well, Tim, what's that reason? Hey, little Timmy Rogers, I'm glad you showed up tonight. Price has established a dealing range, right? Price has established a dealing range. Price has took out buy side and immediately came down and took out sell side, right? Showed us a signature that may be the wig snatcher, and it has engaged opposing liquidity and reached our anticipatory reactionary point. So now we're on our entry time frame looking for a setup that's going to take us, in this case, bullish. If we were bearish, we would be looking for a setup to take us bearish, right? Okay, now we're on our entry time frame. Now that we've come to our entry time frame, we see here. Now let's go through it and see what we could have taken advantage of, right? So we come into the sell side of our dealing range, right? Price drops below it, consolidate a little bit, drops more, pulls back up, right? Drops again, hits some more sell side. Now, from our sell side of our dealing range that we're watching down to this sell side right here, from the overall higher time frame, when we said this was a low that was set in a higher time frame where somebody was waiting for it to engage that sell side liquidity, has price given us any reason to try to buy anything yet? From this drop below that sell side to that drop below this sell side, has price given us any reason to want to buy anything, yet? Up in here. No. Very good. No. It hasn't given us any reason to buy anything yet. Shout out y'all for Thomas, SC, Father Legends, Tish, who else? 80, Kashaya. Yeah, this for y'all. For y'all, everything y'all have been saying so far. Thank you. I ain't been hitting my sound effects. Y'all been pulling up with the hard-hitting answers. Okay? So, then once we get down here and take out this sell side there, right? We notice we get a strong reaction off of that sell side. That strong reaction by itself is worth nothing. Right? It's worth not a thing. Okay? So then we come up here, right? We come above that there, and this candle right here, that candle right there, right? That candle is the first indication of a possible change in the state of delivery, right? And why is that? Because after we took liquidity, right, at an anticipatory reactionary point, at a spot where you anticipating the price may reverse, right? Narrative got to be in place, right? We create an inversion fair value gap right here. Okay. We create this candle right, this 903 candle right there creates an inversion fair value gap. Right? Let us come here. 850 to 910. Okay. I keep forgetting to put these on. I gotta, cause I'm using my indicator. I'm using my indicator for something else. So, right, that's our macro window during this time, right? So, as we drop here, right, that candle there, we go below that sell side. We come into the macro window. We said the macro's window, the macro time frame, the macro's job is to engage liquidity or an imbalance that has not been engaged yet. Our sell side for our dealing range that was just established got engaged on this 848 candle. So at 850, price started to spool towards that sell side liquidity right here. Right? So we get to a higher time frame sell side liquidity, sweep it out, and then on this candle here, we create an inversion fair value gap, right? Now, what is significant? What makes this inversion fair value gap significant? We talked about being able to trust PD arrays doing their job, right? So now, this SIBI, what's a SIBI's job? A SIBI's job is designed to do what to price? A SIBI's job is designed to do what to price? I sure wish somebody would talk to me. And who is anybody left in Discord? Who left in Discord? Keep price down, right? Keep price down, right? So a SIBI's job is designed to keep price down. So when we see a SIBI, right? When we see a SIBI created in the discount of a move, what do we anticipate that SIBI to do? Do we anticipate that SIBI to do its job, or do we anticipate it to fail? If we see a SIBI created in the discount of a move, right? We anticipate it to become an inversion, right? We anticipate it to fail, right? We're not trying to sell that SIBI because we just took out higher time frame liquidity. We're in the discount of the move. We are bullish, and we were anticipating this to be the manipulation move, right? So per our analysis, we're looking for any bearish PD arrays in the discount to fail, right? We're looking for them to fail. So when we get this up close candle creating this inversion fair value gap, that's the first signature that price is possibly giving you a change in the state of delivery, because an inversion fair value gap coming right after a liquidity sweep is a type of change in the state of delivery. Okay? Now, We create the inversion fair value gap, right? And then we create, what is this right here? What is that candle right there? We consolidate for a little bit and then we displace away. What is that candle right there called? Right? When price consolidates and then displaces away to the upside, right? And I say it displaces because we got heavy expansion with imbalances involved, right? What is that candle right there called? An order block, right? So you create a bullish order block, right? So you got, first of all, you got a type of change in the state of delivery. You create a bullish order block, right? And then when you trade above this opening price of this 857 candle, right? When you trade above the opening price of this 857 candle, what does that give us? Not the 856 candle, the 857 candle right here. This candle here, right? The breaking market structure is the 856 candle high, right? This is, right? This is your breaking market structure right there, because that high took out that low and then we traded back above that high. That's your breaking market structure right there. So you got a bullish breaking market structure there, right? And then right here on the 857 candle, when we trade above the opening price of the 857 candle, that's, like Here to Learn and Share said, that's your change in the state of delivery, right? What makes this the change in the state of delivery? Because these 1, 2, 3, 4, 5 consecutive down close candles right here that went down and took out this liquidity right there, that's when you trade above that opening price, that's now your bullish order block, right? That's now your bullish order block. And whenever you sweep liquidity and then create that bullish order block, when you trade above that opening price, you don't have to close up here. You just got to trade above that opening price and be a part of the correct narrative. Now that is your change in the state of delivery. That's what makes it an ICT change in the state of delivery, because you traded above that price and it's supporting the narrative of price wants to turn around here at this anticipatory reactionary point, right? So now that we see that we got an inversion fair value gap, right? We totally blow through, right? We blow through these up close candles right here. Just push right through them, right? We push slap through them, and we push through the high, and we push through the bearish fair value gaps, right? That means what? Price has switched to what? Right? Price has switched to what kind of program? What kind of program has price switched to? A buy program. Very good. Price has switched to a buy program. And now that you have your change in the state of delivery, your bullish breaking market structure, right? At this point, if you're more advanced, you can start looking for some type of entries. If you're more advanced, right? Now, if you trade inversion fair value gaps, right? You could have got an entry here, right? You could have got an entry here. When this candle closed, you could have traded off of an inversion fair value gap there. If you trade inversion fair value gaps, right? If you're comfortable enough, because after sweeping liquidity, that's a type of change in the state of delivery. If you're not comfortable enough with that, right? And you trade order blocks or breakers, right? Once you trade above that candle right there, even if this candle is still printing, right? Anytime price touches that opening price right there, which is 20,442.50, you can buy that. Mother, can you buy that? You, even when this candle is still printing, you can buy that number right there. You can buy that price right there, because now that's a order block. That's the opening price of this order block. You can buy that if you trust it enough, right? Once this candle closes right here and we dip back down into the wick of this breaker, you can buy that. If you're more advanced and you trust it, you can buy that. Why? Because we got a bullish break in market structure. We got a change in the state of delivery. We got two inversion fair value gaps. We got a breaker. We got a bullish breaker, right? We want to see the most sensitivity in the wick of the bullish breaker, right? Now, if you don't trust all of that, right? Now that price has come up here, right? Above this, right? What do we do here? What do we do here? Buy side, sell side, and then we left that area. So this candle here, from the high of that candle there, all the way down there, what is this now? What is that area that I just circled? Right?
That's a balanced price range right there, Tim.
Balanced price range, right?
I had dozed off for a while on you, man, but I'm back.
We don't want to see price come back down there, right? That's a balanced price range. We weren't brave enough to take anything down there, but now that's a balanced price range. And after we leave that balanced price range, right, we create yet again another inversion fair value gap. Not only do we create an inversion fair value gap, right? Let's mark this out the right color, right? Not only do we create an inversion fair value gap, we create, is there a volume imbalance there? It matters not. We create a very small bullish fair value gap right there. Okay? So we leave the balanced price range, push up, right? We push up, create a bullish fair value gap. This bullish fair value gap is sitting on top of an inversion fair value gap, right? We don't want to see price come back down to this balanced price range. So when we pull back down into this bullish fair value gap, that's an entry right there. Bullish fair value gap entry right there, right? So that's a bullish fair value gap entry there, right? We get long there, then we push up, right? You say, okay, I missed that one. I was kind of scared to take it. I missed that one. No problem. We come up here again, there, create a bullish fair value gap there. Did we create one here? Let's see. Not quite yet here on the inversion, but we create a bullish fair value gap here, right? We create a bullish fair value gap there, right? That bullish fair value gap there. There's a bullish fair value gap entry there. Then on this 916 candle, we create another inversion fair value gap, right? We got another inversion fair value gap. We have a bullish order block, right? So we got a bullish order block here inside the inversion fair value gap there. So there's an order block entry. There's an inversion fair value gap entry, right? We consolidate there a little bit, right? We get up there. We create a bullish breaker when we trade above that price, that price right here, right? When we trade above there, right? We create a bullish breaker We trade above there, right? Once we poke above that, we got a bullish breaker here, right? Price trades back down into a fair value gap, into a breaker, right? For those who don't know, this is what ICT calls a unicorn setup. When you got a breaker, right? You got a fair value gap in line with a breaker, trade back down into that. That's a unicorn setup. So there's a unicorn entry with the fair value gap and the bullish breaker, right? Price displaces up. We come back down. Look like we might sweep some liquidity there. Did we sweep any liquidity there? Let's see. We're just checking to see if we swept any liquidity there. Want to include everybody. Nope, we didn't sweep no liquidity there, right? So no liquidity was swept there, right? We come back down into this rejection block there because we didn't take the liquidity, right? We got equal body candles there with a wick right there, boot, poking to there, right? And then price pushes up. So that's a unicorn entry there. Then y'all get the picture. Y'all get the picture. We're you know what I'm saying, continuously, and then we get into a bunch of high resistance, right? Get into a bunch of high resistance liquidity up until this time here, and then it's a slow grind up to this internal buy side right here, right? Hit a bunch of high resistance, right? Got a slow grind up into that buy side there, then a slow high resistance grind up into the other buy side of our dealing range, right? And nothing about that should sound foreign, because the only thing that might change is the PD arrays that we were looking for to enter on. But as far as establishing the range, engaging the liquidity, looking for the signatures, all of that, exactly the same. Man, it's somebody on Al Gore's internet charging you $19.95 for this right here. This stuff really works, man. This stuff really works. Can somebody please pinch me to make sure that I ain't in the matrix? Am I seeing a cat glitch? Am I having deja vu? Is the clicks clicking yet for y'all? Is the clicks clicking? Why you retracted your statement, Jennifer? Don't be retracting your statement. Has this become extremely easy for you in real time? No. It's not easy for me because I'm human. And it's hard to sit there and let price play out. Especially like y'all know the conditions we've been in for weeks and months. It's been extremely high resistance conditions. So looking for the signatures is not hard. That's easy. But the hard part about it is controlling me, controlling myself, right? That's the hard part, right? Not wanting to push the button, right? Not wanting to jump in, sitting there so long and fooling yourself into thinking, oh yeah, there's the entry. Because you're not being patient. That's the hard part. But as far as seeing the signatures, right, I've gotten to the point where I can see the signatures pretty well. I can see it playing out before it happens. It gets scary when you get to the point where you know exactly what price is going to do and it doesn't. It starts to feel weird. It's like this, I can't explain it. It's this feeling that you get inside when you know, okay, it's fun to do something. And I've even been on here with y'all when I be like, okay, nope, I don't like this. The algorithm ain't doing right. And then we sit there running our mouth about 10, 15 minutes later and it don't do nothing. And then y'all be like, well, Tim said it ain't gonna do nothing. It ain't the fact that I got a crystal ball. It's just that when you see the algorithm doing what it's supposed to do, it acts different than when it's being constrained. Right? It gets scary when you, like Michael said, it feels illegal to be knowing this stuff, man. Here, learn to share. You see this stuff too, man. Cause the way you be shouting out these answers, you already know this stuff, man. You already know this stuff. Matter of fact, you know it so good. I'm getting ready to kick you out the gang. I'm putting you out. You been here too long. I'm finna put you out the gang. I'm finna put you grandfathered out. You already know this stuff. You don't need me no more. What's your last question? Your last question before we put you out. What's your last question? Do anybody else got anything? Is anybody in Discord? Who in Discord? I know Lump was in Discord. Who else in Discord?
Nah, I ain't got no question.
You ain't got none?
No.
What's your question here to learn and share? That must be a long question. I wish it was like on Discord when it be like, here to learn and share is typing. How do you trade the Asian session since it seems slow? Does it still do? Yes. Yes. We done went through the Asian a few times. We done talked about the same stuff with the Asian session a few times. Remember when I was like, this is what I've been telling my brother to watch? I was like, watch this right here. It's the exact same thing. I was like, watch this during the Asian. Start, you know what I'm saying? After 7, at 7 o'clock, start watching to see if price establishes the range. You know what I'm saying? Yeah. Same thing. Same thing. Matter of fact, today, this morning session, we started with the Asian session. Right? Go back and watch the video from this morning. We started with the Asian session with establishing the range. Up under the scribble scrabble. Remember the scribble scrabble that who was that? Rhonda? I think Rhonda was like, I got to go back and watch it because I need to know what Tim scribble scrabbled on. All right. Go remove the scribble scrabble. All right. Take off the scribble scrabble. And then let's go to Monday. Let me do this. Turn on my New Day opening gap. New Day opening gap for the day. Where's my New Day opening gap? Okay, boom. So there's my New Day opening gap for today. All right. This is the agency. Remember when we talked about price earlier? Right? We talked about price earlier. We was talking about let me go to the 15-minute charts. Cause I think we was looking at it on, what was looking at, 15 minutes or 5 minutes this morning? I think we was looking at 5 minutes. Was it 5 minutes we was looking? It don't matter what we was looking at. But right here. Remember we was looking at this right here? Just like that. And we was talking about like we established our range, right? We was talking about we went in and we had
You're not sharing your screen.
Oh.
YouTube.
I ain't going back. But we established our range. We had engaged the internal sell side, right? And then we went back to the buy side, right? We had took out the internal sell side. We went back to the buy side. And since we had engaged the buy side of our range first, we was looking for an opportunity to come back to engage the sell side, right? But in this right here is during Asian. All this is during the Asian. So during the Asian, right, we had the opportunity to create a high, right? We created a high. We had a low down here, right? inside this, we had some internal liquidity that we engaged, right? And so now in this range here, right, all we did was come set relative equal lows, right? So we was looking for price made a high, made a low. While we're looking for it to engage, we set relative equal lows, and then we set the relative equal lows and came back up and got this break in market structure. That was our clue that we could go long to go engage the buy side, because we set relative equal lows without taking them, and then that take us to the buy side. So there's a trade during the Asian right there that you could have used to take it back to the buy side, right? If you didn't get in down here, we was talking about, we was engineering liquidity, right? We was engineering liquidity there, right? And then we started to move up, and then we engaged the buy side. And then once we did all of that, right, now that we've engaged the buy side of our dealing range, right, now we're looking for an opportunity to come back and engage the sell side. And then we get over here inside the London, right, the London comes back and engages the sell side from our initial dealing range that we started watching from when? The beginning of the trading day. Right, so this was the beginning of the trading day when we established this range, right? And then after establishing that range, we engaged the buy side. And then when we move into the new day for the New York session for the algorithm, right? That's when we did the opposite, right? We did the establish a range and go bullish. Then when we moved into the new day, we established the range and went bearish. And during this bearish move, we came down and took out the sell side from our initial range that we set at the beginning of the day, right? It ain't move unusual. It didn't move unusual, right? That's a regular Asian thing. It's like we trading like in a small range, right? Asian typically trades in a small, we traded in a small range there, and then we moved up, right? And then after we moved up, we moved back in. Like, it ain't, price ain't gonna always do the exact same thing, right? Everything is relative, right? Everything is relative, because look at the London. This is the London, right? This is New York, and this is the Asian. So looking at the London and looking at New York, is the Asian a small range? Because everything is relative, right? Everything is relative. So there you go, right? We got a small range in the Asian, right? A bigger range in the London, and then a bigger range in the New York, right? Everything is relative when it comes to price, right? And is every day going to be like that? No, every day ain't going to be like that. Y'all know some days in New York, it be like a little old tight range in New York. Don't do nothing, right? Today, the New York moved a lot, but it was just high resistance, right? Coming here, pre-market, nice fluid moving, right? Nice fluid moving. But soon as we get into the 9:30 open, high resistance all the way up, right? High resistance for the rest of the day. And then right here, we had a nice little move, nice little tracement, and then just do, nothing, right? But it was like high resistance up in here. All right. Everybody wave bye to here to learn and share. She getting kicked out the gang. She been here long enough. She don't need me no more. She got everything she need to know in her cranium, in her chrome dome. Hey, man, that's all I got. Do anybody got anything for me? Any other questions? Any other questions? Any other questions? Nothing. Going once. Nothing. Going twice. Nothing. 3 times.
Yeah, I got a question.
What's up?
No, I'm just joking. I'm going to ask you about Mike Tyson. I'm just messing with you.
But see,
Well, no, I'm good.
I got this biting fetish, and I just bite on my gloves when I be boxing. I just bite on my gloves. Another banger. Appreciate it. 80 said it's another banger. Let's show 80 some love, man. 80 said it was another banger. Thank you, 80, for pulling up. Thank you. Thanks to 80 and everybody else that pulled up. If by some chance you found value in this, please share it with somebody who you think might find value in it. If you like it, please press the like button. If you don't like it, let me know what you don't like about it, and I'll do my best to do better the next time. And with that, that brings us to the end of this intraday price action recap. Right. If you haven't seen it yet, it's going to click in a minute that we repeat the same things over and over and over and over and over, because the most important part of trading anything is understanding order flow and how price delivers. It is essential. It is the sine qua non of trading. Y'all take it easy, man. I appreciate you for hanging out with me. And I'll see y'all tomorrow at 6. What's tomorrow? Tomorrow is Wednesday, so I won't see you tomorrow at 6 because we have Q&A. We got homework review with the mentees. Mentees, pull up with your hard-hitting questions. I will not drag questions out of you tomorrow. When I pull up, if no one has anything, I will leave. Thank you again. It's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's Big Spot if you don't hablo Espanol. Till the next time, man. Y'all be safe out here in these trading streets. I'm gone.